Hey guys, it is Julie here with TipRanks. It is September 1st, which means we've just heard monthly results for vehicle deliveries for some of China's biggest electric vehicle companies. In today's video, we're going to take a closer look at those numbers and how their stocks are reacting. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we've heard vehicle delivery amounts for some of the biggest electric vehicle makers in China. This includes NIO, Xpeng, and Li Auto. Now these results can really move their stock as it'll show how successful they've been this past month. We're going to take a closer look at these numbers and see how these companies stacked up and what analysts are predicting for their stock's future. Now, please keep in mind that these videos are never a suggestion to buy or sell any specific stock, and that it's always important to do your own research and due diligence. Companies like these can have a lot of different risks involved, including political risk, so just make sure you understand all of that before making any investment decision. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Okay, let's get right into these three Chinese electric vehicle stocks, starting off with NIO. Trading under the ticker NIO, they're currently at $37.92. Their stock is down about 3.5% today after the company provided their August 2021 delivery update. Along with their delivery vehicle update, they've also lowered their outlook for Q3 deliveries due to supply chain constraints. The company said that it delivered 5,880 vehicles in August 21, reflecting a year-over-year increase of over 48%. Their cumulative deliveries of the ES8, ES6, and EC6 reached 131,408 vehicles. Furthermore, NIO's new orders peaked at an all-time high in August, boosted by strong demand despite supply chain constraints due to the pandemic in some parts of China and Malaysia. Due to those supply chain constraints, NIO has lowered the outlook for their third quarter by 500 vehicles. The range for vehicle deliveries is now 22,500 to 23,500. The NIO stock currently has 7 analysts with ratings, and they all come in with a buy rating. With price targets ranging from a low of $57 up to a high of $72, our upside potential ranges between 63 to 90% growth for this next year. Also sharing their August deliveries was Xpeng. Trading under the ticker XPEV, they're currently priced at $41.29. Their stock is down over 2.8% today, despite a solid increase in deliveries. For the month of August, Xpeng delivered 7,214 vehicles. This was an increase of 172% year over year. This included 6,165 P7s, which was a record month and a 209% increase year over year. For their total vehicles delivered year to date, they're sitting at 45,922, a 334% increase year over year. Xpeng plans to launch their P5 family sedan on September 15th, with deliveries of that beginning in October. In August, the company began to transition production for the G3 SUV to the G3i, the mid-cycle facelift version of the G3, to its wholly owned Xpeng Smart EV manufacturing base. As a result, some planned deliveries of the G3 were affected in August, but the company expects to start deliveries of the G3i in September. The Xpeng stock also has 7 analyst ratings, and they also all come in with a buy rating. Their price targets have a slightly wider range, with a low end of $46 and a high end of $72. The lowest upside potential would be about 11%, where on the high end it would be growth potential of 74%. And lastly, we also heard from Chinese EV company Li Auto. Under the ticker LI, priced at $30.70 per share, their stock is down about 0.5%. For the month of August, Li Auto said that the company had the highest number ever of deliveries made in a month. They delivered 9,433 Li Ones in August, marking a 248% year-over-year increase and 9.8% sequential growth. Total deliveries in the first 8 months of 2021 and cumulative deliveries of Li Ones reached 48,176 and 81,773 respectively. As of August 31st, Li Auto had 114 retail stores across 69 different cities. Earlier this week, Li Auto posted a loss of 0.07 RMBs, which was wider than the 0.04 that analysts had expected. Their revenues, however, did come in ahead of analyst expectations. Following this, one analyst noted that the Li One enjoyed a strong consumer demand after its launch, but its delivery growth has been limited by an industry-wide shortage of chips due to COVID, and Li has no visibility as to when it will improve. That being said, the Li Auto stock currently has 6 analyst ratings, and once again, we have unanimous buys. With low-end price targets of $37 and high-end price targets of $62, the upside potential ranges from about 20% all the way up to 102% growth potential. So it looks like all 3 companies had some solid year-over-year growth for their delivery numbers. However, some supply constraints may be weighing on the stock's potential for the future. Now, I'd love to hear from you guys on these 3 companies. Which is your favorite and how much growth potential do you think that they have? Let me know your thoughts in the comments down below. If you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. As I mentioned before, please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence. Thank you all so much for watching. I hope you have a fantastic day, and I'll see you back here next time.